Hey, good morning, everybody. Monday morning, a little bit cooler here. Back in Wisconsin, probably in the 50s, it looks like here most of the week, and cold and rainy. So, any sort of planting progress that was going on around here, thoughts of planting are going to be grinding a little bit to a halt here this week. Looking ahead here at the grain markets, we got corn down a penny and three quarters. We got beans up seven and a quarter. July Chicago wheat is up two and three quarters. KC up a penny and spring wheat up six and three quarters. Really big news here over the weekend was that cold weather and freeze through parts of Kansas, Oklahoma, Nebraska areas. A lot of that's wheat country in here. So far, markets kind of having a muted reaction. Another thing going on in the background is you've got the Russian grain deal going on and off. A lot of rattling there as far as whether or not they're going to cancel this grain deal or keep it going. So personally, I think the market's sleeping a little bit though here on this wheat deal. I've got a KC wheat chart here a little further along. The U.S. crop is certainly struggling in here, and I think we're getting a little too far along into the season that we need to start adding some premium back into this wheat market. Some other headline news here, real quick. Importing Brazilian beans, about 3 million bushels. Nothing to really be afraid of. The USDA always budgets a few million bushels for imports this year, or currently it's at about 15 million bushels. In 21, 22, it was at 20 million bushels. So just a drop in the bucket. But I think the key point here to remember is that Brazilian beans are cheap. The U.S. export market is going to be basically dried up here in the near term due to the size of the Brazilian crop and the affordability of their beans out there on the global market. Funds remain net long corn, net long beans, and short wheat. Again, we think that wheat market still kind of has some sleeping value, if you will. Flipping over to corn chart, this is something we're watching here this week as we get started. That blue line is 550 to 540 area. If that area is going to continue to hold or not. Our bias is we think so. It's still a little early. We've got cooler temps in here. Planting progress is probably going to slow down a little bit. We think that this area will continue to hold here in the near term. But again, as you can see, we've got that falling 50-day coming in tighter. We're going to have to be ready to reward some rallies. If you're following along on our report, we've been at about a 590 target, something that might need to get lowered a little bit in here as we go forward. We'll wait and see. Like I said, KC wheat, this is the December chart. Again, kind of coming back down, testing that $8 area. That's where that black line is. We've held that. You've got a 50-day moving average flattening out a little bit. I think this $8 area holds. I like this chart from a longer term point of view. It gets you through the summer weather months into harvest. We really kind of know what the wheat crop's looking like, as well as what's going on in the global markets. Technical traders out there, we're going to point out you've got open gaps up there at 1050. That's why I like this for a long-term trade. But again, you're going to have the stomach for some volatility, and a 5 or 10 cent stop in this long-term hold is certainly not going to work for you. You need to budget probably 30 cents or so to be involved in this market. But again, something with the funds net short, the tight ending stocks, and the weather, we think this market has some upside potential. Hey, it's good to be back. I was on vacation here last week. We'll have our weekly webinar again out tomorrow. Make sure to hit the thumbs up button. It's free. We appreciate it. We'd like to know that you guys are out here enjoying our videos. And we'll see you again here tomorrow. Let's try and get a little bit better today.